Is it possible to look at a financial app on your phone and know, with absolute certainty, whether it is a lifeline or a total scam? That is the exact question we are answering today. Because if you are retired or you are sitting there counting down the months until you can finally say goodbye to the workforce, your tolerance for financial games has got to be zero. Do you hear me? Zero. You do not have the time, and you certainly do not have the money, to make a mistake with a company that calls itself Possible Finance. I know why you're looking at it. I know the fear that keeps you up at night. You are living on a fixed income, or you're about to be, and inflation has made everything from eggs to electricity feel like a luxury. Then, the unexpected happens. The air conditioner breaks down. The car needs a new alternator. A medical copay pops up out of nowhere. You look at your savings, you look at your checking account, and you realize you are just a few $100s short of making it to the next Social Security check or the next pension distribution. You feel that pit in your stomach. You feel the panic. And suddenly, an app pops up on your screen promising you up to $500 with no credit check. It sounds like an answer to a prayer, doesn't it? It sounds so easy. But your gut is screaming at you, is this legit, or am I about to get scammed? Let's strip away the marketing fluff and look at the absolute truth. Is Possible Finance a scam? No, it is not a scam in the legal sense. They are a legitimate financial technology company. They are a registered public benefit corporation. They partner with real banks, like Coastal Community Bank, and they actually do what they say they will do. They will advance you small amounts of money, usually between $50 and $500, without pulling your FICO score. And yes, if you pay them back on time, they actually report those payments to the major credit bureaus, Experian and Equifax, which can help you build your credit score. But listen to me, and listen to me closely. Just because a company is legal does not mean it is safe for your wallet. When you dig into how Possible Loan actually works, the numbers should make your jaw drop. They do not charge traditional interest rates. Instead, they charge a flat fee for every $100 you borrow. Depending on the state you live in, that fee ranges from $15 to $25 for every single $100 you take out. Now, 15 or 25 bucks might not sound like a lot when you're desperate. You think, Susie, it's just $20 to fix my emergency. Let's do the math. If you borrow $100 and you have to pay back $120 over just 8 weeks, do you know what that equals out to as an annual percentage rate? It is an APR of 150% to over 240%. Think about that. If you had a credit card with a 200% interest rate, you would tear it up and throw it in the trash. You would call it highway robbery. Yet, because it's wrapped up in a beautiful, shiny smartphone app, people flock to it. They also offer something called a possible advance, where they give you up to $300, but they charge you a $15 monthly membership fee to get the highest amounts. $15 a month, every single month, just for the right to borrow your own future income. That is a recurring drain on a retirement budget that cannot afford to bleed a single dime. The danger here for a retiree isn't that they are going to steal your identity or take your money and run. The danger is the debt trap. Possible Finance designs these loans to be paid back in 4 biweekly installments over 8 weeks. They tell you that you can reschedule your payments up to 29 days inside the app without a late fee, which sounds incredibly nice. But what happens when those 8 weeks are up? Your Social Security check hits, and a massive chunk of it immediately goes to pay off that $500 loan plus the $90 fee. You are left short for the next month. So what do? You open the app and you borrow again. You get caught in a vicious, spinning wheel of short-term borrowing, paying exorbitant fees over and over again just to stay afloat. You are handing over your hard-earned retirement dollars to a tech company because of a temporary cash flow squeeze. I understand the fear of having bad credit or no credit history as you age. Maybe you haven't borrowed money in years, your credit file has gone thin, and you think you have no other choices. But you must never let fear dictate your financial decisions. If you are facing an emergency right now, I want you to take a deep breath and look at the alternatives that do not cost you 200% interest. First, if you belong to a credit union, or if you can join one, ask them about a payday alternative loan, also known as a PAL. These are small dollar loans specifically regulated by the federal government for credit unions. Do you know what the interest rate is capped at? 28%. Not 200%. 28%. And they will work with people who have less than perfect credit because they are member-owned institutions. Second, look into community assistance programs or local nonprofits. Many areas have designated funds specifically to help seniors and retirees with one-time emergency utility bills or medical expenses. There is no shame in utilizing resources designed to protect you. Third, if you have a traditional credit card with available balance, even a high-interest card at 25 or 30% is vastly cheaper than a short-term app charging the equivalent of 200% APR. Your actionable takeaway today is to protect your cash flow at all costs. Go to your phone right now and do not download these quick fix apps out of panic. If you already have the app, look at what it is truly costing you annually. Sit down with your monthly budget and create a tiny cash cushion, even if it is just $5 or $10 a week tucked into a separate savings account. That small emergency fund is your shield. It is what keeps you independent. It is what keeps you from having to rely on expensive corporate crutches. You worked too hard, for too many decades, to let your retirement peace of mind be eaten away $20 at a time by an app on your phone. Be strong, be smart, and secure your own financial future.